Salute to all y'all. How you guys doing today? It's BGFX. Welcome back to the channel. Today what we're going to be talking about is an extremely simple but extremely profitable strategy to help take your trade to the next level. So basically what this strategy is going to consist of is it's going to be support, resistance, moving averages, and trend lines, and we're going to be throwing the basics of the power of those simple strategies in with the power of the Fibonacci. So our Fibonacci is going to be used to catch our entries. So typically my trading style consists more of reversals and catching reversals off of key levels using Fibonacci. But in this case, I'm going to show you guys how to execute the markets when a reversal doesn't happen and when we see a breakout. Okay, we're going to see how to capitalize on the continuation of a trend rather than trying to pick tops and bottoms at all times. So without further ado, we'll go ahead and get into the video. Make sure to take notes if you need to. Watch this video more than once and back test it. You know, after you watch this, get on the charts, try it out, and see how it is for you, because it is definitely very powerful and is definitely profitable if utilized right. So I'll catch you guys in a little bit. It's been your boy BGFX. Appreciate you guys for watching. So for me, my particular bias is going to be to go long on this pair, aka buy or JPY. So now that I have my bias, I want to go down to the lower time frame and I want to map out key levels. Now the reason I want to map out some key levels on my chart is because I don't want to blindly enter in random areas. I definitely want to have a reason to enter, and I want to enter around the value zone so I can catch the most reaction. So step one is obviously going to higher time frame. Step two is going to be check out this 1 hour time frame. Okay, now you're going to need to build more than one confluence to go ahead and enter this trade. So our first reason to enter is going to be finding support resistance. So in this case, we have very nice support. Eventually we get touches, breakouts, and we can see that price is overall showing an extreme amount of value to it. So okay, so overall, it looks very nice. The second thing we're going to want to do is throw this EMA indicator up on the chart. Okay, this EMA has a 20, 50, 100, and 200 EMA on it, and it's a very powerful indicator to use. So in this case, we're going to be using the 20 moving average to identify what the initial momentum of the market is looking like. So I'm going to show you guys what a profitable trade actually looks like. So we see that the support resistance was very respected. We see the breakout, the pullback, continuation, and then we have another approach. Now the thing I really like here is that we see price find this bottom here, which is actually previous support resistance, and I'll go ahead and draw that out just so y'all can see. I'll go ahead and draw that out. Okay, and you can see that once price rejects this area, it breaks through every single EMA. And our 20 EMA, if you look closely, this 20 EMA goes from being at the bottom to crossing through every single one and now acting as a value zone. So this would be our second area of value when it comes to entering this trade. So not only will we have support and resistance, you know, everyone says buy on support, sell on resistance, you know, not only do we have support and resistance, but we also have the fact that the EMA has crossed through every single other EMA that the indicator pairs with. So that to me is showing that the short-term momentum is up. Being that our 20 EMA is the shortest term EMA, that is going to give us better short-term trades. Okay, when it comes to the 200 to 100 EMA, those longer term EMAs, those are going to show us longer term, more accurate trades. But when it comes to taking short term trades, I'm going to be looking at the 20 EMA with the strategy. So we're looking at the 1 hour time frame, and basically what it's showing us is that price has built momentum. It has built a very strong foundation of momentum. So we see that the moving average crosses and we get a breakout. So once we see a breakout, I'm going to show y'all what we're going to do. Once we see the breakout, we're going to go to the 5-minute time frame. All we have to do here is we're going to take our Fibonacci from the lowest point before the initial push of bullish movement. So we're going to take our Fibonacci from the bottom to the top. Okay. Fibonacci is going to be from the bottom to the top. And you'll notice that once the breakout happens, this Fibonacci is going to measure our pullback. Now, when it comes to entering for breakouts, for me, I only enter on the 0.5 Fibonacci. Okay, and I'm going to tell y'all why. When it comes to breakouts happening in the markets, a lot of times when price pulls back, it will not pull back as deep as a reversal. So when I'm trading reversals and candlestick formations with a shift of momentum, I am typically looking for deep pullbacks because I know deep pullbacks typically happen. However, when we're seeing an increase in momentum in the markets, we notice that price pulls back a little less steep before it continues. So in this case, price touches the 0.5 Fibonacci, and it is combined with the fact that it's a support resistance. So we're going to go ahead, we're going to enter, and we're going to go long on the 0.5 level. And then the stop loss is going to be around these lows, and then take profit is going to be around the 618. And this will be a 1 to 2 trade. So depending on how much you risked, this could have been a very nice trade for you. Okay, now when it comes to me entering for breakouts, I will typically have a little bit of a smaller risk to reward compared to when I go ahead and enter for reversals. Because when you're looking for a reversal in the markets, that means that you want to see a complete shift of momentum. So obviously you would most likely be looking for a stronger move with more potential to actually catch, But when it comes to this continuation, for me, I like to have a pretty wide stop because a lot of times, market makers will attempt to stop you out. However, I look for the pullback. I look for a continuation with usually about a 1 to 2. So if I'm risking 2%, I could be looking for about 4% on this trade. And the thing about when you're trading continuations compared to reversals is that the continuation is usually more accurate than a reversal, because usually when it's a reversal, you're picking tops and bottoms. And don't get me wrong, they're extremely profitable. But when it comes to trading a continuation, a lot of times you will see a little bit more accuracy, but you'll kind of sacrifice the amount of pips you could be catching, if that makes any sense. So just a quick walkthrough through this trade. First thing we did, obviously went to the higher time frame. We identified what the market was overall doing. It looked like it was trending up. It was breaking these areas of value. Second thing we're doing, we're mapping out support resistance, and we're also going to find a second form of confluence, which in this case was the moving average, pulling all the way up through and building momentum. Third thing we're actually going to do is be going to the lower time frames, such as the 5-minute or the 15-minute, and we're going to pinpoint the breakout, and we're going to draw the Fibonacci from the bottom to the top. Let it pull back to the 0.5 level, no more, no less, and then let it continue up to the 618 and have your stop loss around the 1 level. So this is very basic but very profitable and extremely powerful strategy. We're going to look at one more trade before I wrap this video up. Okay guys, so we're looking at USD/JPY currently on the 1 hour time frame, and I've already looked at the higher time frame, and we can see that the overall movement of this pair has been very steep, and it's been a lot of bearish pressure, which means that price has gone down a lot in the market. So my initial bias isn't to sell completely, but if we see breakouts and pullbacks, we'll be looking for continuation. So step one, okay, obviously find some support resistance. We'll find some support resistance right here. All right, and then we're gonna look for a second form of confirmation. So let's go ahead and see if we can find something so that we can actually look for a nice trade. So to me, looking at the EMAs on this trade, EMAs aren't showing us too much. It just shows that there's an extreme bullish pressure because we see these candles break through every EMA. However, what I'm going to do real quick, I'm going to look at my Bollinger Bands. And if the Bollinger Bands don't show me some form of confirmation, okay, we actually see confirmation right here. We see the breakout, okay, and of course in this case this would have actually been a profitable trade as well because we had a breakout and a pullback. However, this deep pullback shows us more of a continuation. So what I'm going to do here is I'm going to look for that initial push of market structure, which is where it began. And I'm going to go here and we're going to go on a lower time frame. Let's check out the 15-minute on this one. And we're going to identify really quick what everything is looking like. So we see the breakout, we see the pullback. And my first form of confirmation was that price closed above the Bollinger Bands. Okay, but another form of confirmation is the fact that not only do we have a breakout of this area of structure, but we have a pullback. And what happens on a pullback? We have a double top that you can easily bring your fibs down to the low. Okay. Oh, okay, here's our low, here's our low. And entry could have been right here on the 618. Stop loss could have been above the highs. Take profit could have been a 786. So even though a double top is typically something we look at as a reversal signal, okay, and you wouldn't have been able to take it all the way down to 618, but you could have took it down to like the 272, something around that area. But of course, double tops a lot of times we'll look at the end of trends, but we can also use it as another form of confirmation, especially when we have like a little trend line here, it looks like as well. But we see that we had more confirmation due to this Bollinger Band closing above before the continuation and then the pullback. So to me, that is showing even more confirmation. So that's like 4 different confluences built together on one trade, which makes it extremely accurate. But I just want to show you guys how this plays out. Very powerful trend continuation strategy. All you're doing is looking on the 1 hour time frame, starting from there, draw out your support resistance, draw out a trend line, find moving averages that's building momentum, gaining momentum, and you're going to want to buy or sell depending on what happens. If market breaks out to the upside with multiple forms of confirmation, you're going to look to enter on that pullback. And if it breaks out to the downside with multiple forms of confirmation, you're going to want to enter on that pullback. Okay, entering on this pullback usually keeps you safe from fake breakouts. All right, and the most common way you could actually make a mistake trading the strategy is by not looking on the higher time frame first. So if the lower time frame is giving you buy signals, such as on the 1 hour, and if you didn't check the daily time frame to see that price was sitting on an area of value that most likely wouldn't react well with your trade, then you basically set yourself up for failure, because you have to check that higher time frame first. You know what I mean, guys? So it's all about checking the higher time frame, throwing it in lower time frame confirmations, and looking for better forms of entry based off what you see. So I hope this video helped you guys. Very simple strategy. I could just show you this happens time and time again. We have support resistance around this area, Fibonacci top to bottom, and we didn't get a pullback all the way up to support resistance. Oh no, we actually did. We got a pullback all the way up to support resistance, but it didn't touch our 5 level. So this is actually a very common strategy, but I just wanted to kind of walk you guys through how you can use this as another form of confirmation for your trade. So I'll catch you guys later. It's been your boy BGFX. I'm out. Peace.